The Forex market is heating up following that September 17th FOMC, but what does it mean for currency pairs like the euro and the pound? We're talking about all of it in today's video. I've got 6 charts lined up. By the end of this video, you're going to know exactly how to trade these markets going into next week. Of course, this is always just my opinion, never financial advice, but we're talking about the DXY, the euro, the dollar yen, the New Zealand dollar, and also gold today. So guys, if you're not familiar with this channel, my name is Justin Bennett. I am the founder of Daily Price Action. I've been trading Forex now for 17 years. And I'm putting out videos like this every single day. So be sure to hit that subscribe button and also hit the like button, just because these videos take a long time to make and I always appreciate the support. All right, looking at the DXY daily time frame, let's get into it, guys. This is going to be quite the video because, again, we've got 6 charts to cover and markets are finally moving. We've had a lot of sideways action from these markets over the past few weeks. And I'm not saying that it's over, because a lot of times what happens here is that you get months of sideways action like this. And markets remember this. So even though you do get moves like this over the past couple of weeks, you've got the DXY coming into this 98.6 resistance area here. And obviously you've got support down here around 97.7 now. So again, we're not out of the woods just yet because these markets are still sideways. However, we at least have some movement here from the Forex market. So for the DXY, let's take a look here at the monthly time frame and talk about this first, because this really sets the stage for everything else in this video. And this goes for not just the DXY, but the euro, the pound, the dollar, yen, everything, guys. So looking at the monthly time frame here, going back to 2011. So this is that channel that we have talked about now many times on this channel. All of these lows down here going back to 2011. You've got the lows here over the past few months. And of course, this high up here. So this is an equidistant channel. This has really kind of carved out an outline really for the DXY over the past 14 years. So this is why I've been saying that over the past few weeks that it was dangerous getting bearish on the US dollar down here in this area, because you can see where we did get that FOMC bounce right down here. Okay, so we had the bounce, we've had the reclaim now of 97.7. This was kind of that hinge in the market that we were waiting to see what happened here. And like I've said in recent videos, we had all the lows back here on the weekly time frame. We had the close below. We had the close below last week, and now this week is looking like it's going to close above. Now, full disclosure here, guys, I am making this video with several hours left in the session on Friday, so keep that in mind as we run through this. But as of right now, it does look like the DXY will give us that close above 97.7 going into next week. So what that's going to mean for the US dollar is that this now flips to new support down here at 97.7. Okay, so you've got this area down here as new support. And like I've said too in videos last week, you have this single print down here at 97.95. So what a single print is, guys, if you're not familiar with this in TPO terms, time price opportunity, that is an indicator. It's a market profile indicator. And what that means is that if you look at the 30-minute time frame, okay, this down here is an imbalance. So back here we had the DXY going sideways, and then we had the market break out. Now this breakout point right here is still open for business. And what that means is that the DXY could come down here early next week, or even maybe on Friday, and tag this level. And this could also serve as new support. Okay, so off of these highs from back here during that consolidation, again, this is your expansion point out of this consolidation. So this could become a magnet for the US dollar. Okay, so keep that in mind that we could see a little bit lower here from the US dollar following the retest of 98.6, which, by the way, guys, and I'm not saying this to brag, but this high up here, 98.6 is a level I've had on my chart now for a long time. And this level up here, served as resistance perfectly last week. So hopefully you guys saw this. And if you were trading the US dollar, that right there was a perfect time to either get out of US dollar longs or start to look for shorts. Okay, so for the DXY, we've got that single print down there just below 98. And that is going to be potentially a target next week and also key support. All right, so new range for the DXY, guys. At least we finally have the market in this new range following weeks, below here going into FOMC, right? So this is going to be your key support. You've got support up there just below 98 of that single print. And this also, by the way, is a fair value gap, which I have a lot of people asking me, what is the difference between a single print and a fair value gap? And obviously, a lot of it comes down to terminology. However, they are two different things. They're both imbalances, but a single print is essentially, if you look at a 30-minute time frame, turn on TPO, right? And I cover all of this in the VIP group too, guys. But by the way, if you want to join us in there, see the link in the description for 85% off lifetime access to that Discord group. But single prints, what this means is that this over here is your market profile. Each block here represents how long the market was in this region. So what you'll notice is that all of these single blocks back here following this expansion out of the range, this is where you get that single print. Okay, so this is an imbalance down here. Now, what is a fair value gap? A fair value gap is essentially, just to put it very simply, if we look here at the daily time frame, right, going back here to this high. So this high from, let's see, Wednesday. So this high right here, this is technically a fair value gap because you had the DXY, this candle here, you had an expansion out of this candle, and so far we have not seen a retrace into here. Now, keep in mind that fair value gaps don't always close. Same thing with single prints. Look no further than this candle back here. This also technically is a fair value gap, and guess what? There's also a single print just above it. So a lot of times you do see single prints and fair value gaps lining up around the same areas just because of the way that they are calculated. Okay, but that basically is the difference between a fair value gap and a single print. Okay, so back here is another example. You've got the high back here. The DXY never tested that high. So you've got this one here that's now open as well. The DXY never tested it. And now you've got this one up here as well. Okay, so that's what I'm looking for next week, guys. I do think we're going to see more of a pullback here. Keep in mind, too, we could even see a pullback down here into this area next week, and then potentially even a wick down in this area before we bounce. Okay, so be careful getting bullish on the US dollar right now following that retest of 98.6, just because, yes, we are finally seeing some bullish momentum off of this 2011 channel support. However, at the same time, you've got the market coming into this resistance, and above that, we have the top of that channel. All right, so I know I spent a lot of time there, guys, but that is going to frame really everything for the rest of these markets. So looking at the EURUSD, I talked about this one last week, guys, and this played out really nicely. So this close right here on Wednesday, we had the close below the February trend line, and we've discussed this trend line in recent videos. So you can see that off of this low from back here in February, you've got all these lows over the past few months. So you've got lows through here, you got lows through this area, and then also this low right before the breakdown. So Wednesday put the euro below this market, or this level here, on a daily closing basis. Now, looking at Thursday, this was a perfect retest. I mean, to the pip off of this level. And I have not moved this level at all, guys, since that video that I made when the market was breaking down on Wednesday. So you can see that, retest right off of that as resistance. And also another thing that I talked about before we got this bounce here from the euro is in the Discord group, guys. This is the benefit of being in VIP. This right here, this 5-day composite POC composite, whatever you want to call it. This is essentially a 5-day composite. And in fact, it's not a 5-day composite, guys. It is a 5-week composite. So I'm going to change this here on the fly. But this right here, guys, so this period of price action back here, all of this congestion from the euro, what this right here means is that this is the point of control for a 5-week composite, meaning that 5 weeks through here, this was the area, this was the point where the euro spent the most time, okay, within this congestion. And areas like this tend to serve as support and resistance. So anyway, guys, I pointed this out to VIP members when the euro was actually headed lower, and I said, keep an eye on 1.1645. Sure enough, 1.1645 right on the dot on Thursday, and we are getting that bounce so far from the euro. So looking at this market now, we've got single prints up here, which probably line up too with the DXY. You've got this level, remember, on the DXY just below 98, also down there around 97.5. And looking at the euro, guess what? You've got single prints up here off of this area. Now, this is also a fair value gap up here right around 1.1722. Okay, now you've also got this level up here. This also is a fair value gap. So you've got areas like this that could come under pressure next week. It would not surprise me at all, given how sideways these markets have been over the past few months, to see the euro bounce from here and give us that push up into these lows, and then potentially even up here before we get some more ranging price action. Okay, so keep that in mind for next week. I mean, this is going to be your first resistance area up here, but like I said, I wouldn't be at all surprised to see the market come all the way back up here into this area before we get more ranging here from the euro. Okay, so trade the range as long as it's there, guys. Don't just go thinking that because we broke that February trend line that all of a sudden this market's going to unravel, because what you have to remember is that it has been sideways for months. And whenever you get this kind of price action, right, even though you get a break here, and even though, let's just say that this is the top for the euro, which we don't know if it is or not, but even if it is, the market is likely to spend a lot of time up here before we get a reversal. And the only reason I'm talking about a potential top is if you look at the weekly time frame, right, this is an area that goes back here to 2022, 2023. So this is an equidistant channel off of these lows and these highs, right? So this is a significant area for the euro to where we could see a significant macro top forming here for the euro. But the jury is out on that, guys. And as I always say, it's better to play this level by level than looking and hoping for that home run trade. Okay, guys, let's move on to the pound here, GBPUSD, which again, very range-bound market. We are seeing some nice movement. And I've taken it off now because the market did satisfy it. But remember that back here, we had 3 single prints up here off of this move that served as a target during FOMC. So this right here was a perfect example, guys, of how single prints or imbalances can drive markets, because it is all about liquidity, and that's exactly what TPO gives you. So looking now at the pound, let's talk about some imbalances here for this market and also what's occurring here on Friday, because you can see that back here, this is a key level for this market. Okay, so you've got lows back here, the market dipped below it. That became a failed breakdown on this close. And you can see that we have these lows through here, right? So we've got a lot of significance around this 1.338 area. Okay, so that right there tells me that this candle on Friday, if we close above here on Friday, then this is kind of that indication that we could get the push back up here into this congestion. Now, for the pound, we've got imbalances up here that, first of all, one has already been tagged here on Friday. So you can see this one right here at 1.3409 or so. That one has been tagged. We've got another one up here, which this is also a fair value gap, right around 1.3424 or so. Okay, so right in this area, this is also going to be a potential magnet next week and also resistance. Now, again, though, I think you've got to be careful getting bearish here for a couple of reasons. First of all, if, like I said, if this Friday candle does close above 1.338, I think you've got that potential for the push up here into this congestion next week. And furthermore, too, I think right now, if you look at this range, you've got to ask yourself, right? Like, does it make sense to be getting bearish down here in this area? When you look at the context of this, we've essentially had a range and we had the market drop below, and now we had a move above, and both of these became failed breakouts. Okay. So you got to ask yourself, though, within this context of this range right here, because this is where the market spent most of the time over the past few months. Within this context, do you want to be shorting down here? And the answer for me is absolutely not. I don't want to be shorting down here because this is near the lows, right? If anything, you want to be shorting up here in this area if we get it. Now, I'm not saying that we will, but the whole idea, and it sounds overly simplified, but the whole idea of trading, guys, is to short high and long low, right? And so if you're shorting down here, then you're doing the opposite of that. Now, whether or not you want to buy this is completely up to you. But I think that the thing you've got to be careful of, though, with that is looking at the DXY, again, you've got the market now above this area around 97.7. Okay. So even though we could get a drop down here next week, maybe even a wick down here in this area, this is going to be a big time support now. The only way that doesn't happen is if the DXY closes back below 97.7. I think if that happens, then you're looking at, pairs like GBPUSD moving significantly higher within this range. Okay. But for now, guys, treat it as a range, trade what is on the chart, not what you want to happen. And right now, we are potentially getting a reclaim of 1.338 here on Friday, but we will have to wait and see how this week closes. Because again, we do have a few hours left in today's session here on Friday. Okay. Now, looking at the dollar yen, I talked about this one last week as well, and we do have a breakout from 148.7. So finally, after 2 months of just complete chop through here, we are seeing the market break out. Now, what's going to be critical for the dollar yen is to hold above 148.7. Now, we have 2 imbalances that we talked about in last week's video. So looking at the 30-minute time frame, you can see where this one here actually triggered a bounce on Friday. So if you're a scalper, this right here was textbook. You had the market come down here off of this low. This right here, I believe, was like 25 or 30 pips. This little move here. Again, if you're a scalper, that was great. But I am not a scalper. I am a swing trader. So for me, what I'm looking at is this expansion point back here, because 148.94 is the expansion out of this range. Okay. And furthermore, like I said, too, I think on the DXY, you've got imbalances like this down here in this area next week. And this candle here on Friday looks like we could get a little continuation next week. Okay. No guarantees of that. But I think if you're looking for buys here on the dollar yen, in my opinion, I think you've got to look a little bit lower here. Okay. Because we've taken out this first imbalance up there around 149.5. And I do think that this area back here, could be on the table for next week. Potentially even a wick below here before we get buyers stepping in. Okay. But this is going to be the key for the dollar yen, holding above here, holding above all these highs following this breakout. Okay, if it can do that, then I think we're pushing up here into this area, this unfinished auction, all the way back here up around 151.44. So that's above this high here. You've also got these two highs around that 151.2 area. All right, so this becomes your resistance area. This is your key support down here for the dollar yen. Simple enough, right? New range here for this market. The only way that changes is if we get the sustained break back below 148.7. If we get on the high time frames, then I think that looks bearish, and we're looking at areas like this down here, right? So coming back here to fill in this wick or this candle. So we'll see what happens here, guys. But again, 148.7 is going to be a big time support now for the dollar yen. Obviously, over the coming weeks, if this continues and the US dollar can finally start to show some bullish momentum, which it hasn't been able to do much of in 2025, if that happens, then we could be looking at a push all the way up here into this imbalance from this candle up there around 153, 154. Okay. But the jury is out on that for now. We'll have to wait and see. Like I said, trade what is on the chart. Trade what's in front of you, not what you want to happen. And right now, it is just a new range here for the dollar yen. So New Zealand dollar, guys, against the US dollar here. This is a really interesting chart because a few weeks ago, what I talked about here was this descending channel. So really clean descending channel off of these highs and lows. And what I was looking at here was the fact that we got the breakout, but then this candle, okay, this was looking very bearish at the time. We got the close below. This became new resistance. So let's zoom in here and I'll show you exactly what I mean. And this is basically all I trade these days, guys. This is my bread and butter setup right here, where you get the market closing below. Okay, so closing above, right? You got the breakout. This right here was the confirmed failure. Now, once that candle closed, notice what became resistance right off of the top of that channel. Now, a lot of times, moves like this, okay, these failed breakouts do tend to trigger extended moves in the opposite direction. So what that means for the New Zealand dollar here is that extended move lower, and that's exactly what we've seen so far. Now, like a lot of these major currency pairs, though, what you've got to be careful of are the imbalances that have formed, last week during this aggressive move. So looking at the 30-minute time frame, and I know I haven't done this for all these currency pairs, but I want to show you guys exactly what this looks like. So this right here, again, a consolidation through here, expansion point. This has not been tested yet. You've also got this one through here right around 0.5785. So this one and then 0.5805. Okay, these two areas through here next week are going to be ones to watch. Now, whether we see this area serve as resistance and the market turn lower, or we get that full push up here into 5805 and then get that push lower is yet to be seen, guys. No way for me to know that. But I do think that this is going to be kind of that pocket to watch following this week's close. So as long as we close below, which it looks like we will, I mean, it would take a Herculean effort from buyers to close the market above here with a few hours left in this week. But if we close below here, then this area up here becomes your resistance, right? Off of these lows down here. And one thing to keep in mind too. So looking back here, talking about composites, point of controls, things like that. This back here is a 3-month composite POC. So what that means, that's a fancy way of saying that all of this congestion back here, this 3 months of congestion back here from the New Zealand dollar, this is a composite point of control. So meaning that this entire area back here from the New Zealand dollar, it spent the most time right here at this level at 0.5660. Okay. So that is going to be something to watch over the coming weeks, because if we do get that push lower, in my opinion, guys, I'm willing to bet that if we get this move down here toward mid-October, then this is probably going to be a significant test for this market. And we probably get a bounce from here, right? As long as it stays below this, obviously. If we were to get the New Zealand dollar breaking back above here, then obviously shorts are off the table. But as long as we're below this, guys, on the high time frames, then I like the idea of looking for shorts up here in this region if we get a retest. And then, potentially in mid-October, looking for that push down here. Now, keep in mind, a few things have to happen for that to occur. And really, going back to the DXY, you've got to see this market breaking out, probably, most likely, for that to occur. Okay, so you'd have to see it holding above 97.7 and then really showing some strength up here toward areas like this. Okay, so that is going to be a requirement. Again, most likely, it doesn't have to happen, but most likely that's what's going to have to occur there for the New Zealand dollar to really push, that low over the coming weeks. Okay, so let's round things out here with gold. Let's talk about XAUUSD because this market has been on a tear. I know a lot of people are interested in it, especially with this rally, and that's no surprise, guys. I don't blame them. This has been a really aggressive rally from gold here ever since coming off this low down here in August. So back here, guys, this was basically compression from this market where you had this key horizontal through here, and then you had these higher lows that were building into this level, okay? So this was compression from gold, indicating that it was likely to break out. We talked about it back here in this area. And so far, we haven't gotten much of a pullback during this breakout because, all of these pullbacks have been so shallow that you can see where we're building up all these sell side imbalances here. First of all, you've got one here on Friday at 37.68. That could come into play next week. You've got one down here at 37.03. You've got one there on 3600, 35.63. Now, I am by no means that we're saying that we're going to come back here and tag these areas. What I am saying though is that this level could come into play, and we could get a sweep down here of this low within this range before we get a breakout. Now, at the same time, though, if we get a breakup here of 3,800, that big round number up there, then, all bets are off. However, here is the big thing for gold, guys. And I want you guys to really respect the pattern that I'm going to show you, because this right here on a log chart, if you go to the weekly time frame, and I get that there are wicks above this. However, if you are a price action trader, guys, on the high time frames, wicks really do not matter. What matters is the closing price. And for that, you can see the low down here, this low, we've got this high back here, and then these closing prices through here. Gold never closed above it. That was a wick. And so technically, this is a valid pattern. So I am not by any means saying to go short gold. I don't think that's the right play here. But I do think if you've been buying this market, if you've been long this market, I do think that this area, okay, and keep in mind, it could be quite a bit higher than 3,800 because, look no further than this wick up here. But I do think that this pocket up here, guys, is going to be kind of the one to watch. 3,800, 3,900, this general area. I think if we're going to get a pullback from this market, a deeper pullback, I think this is the area to watch. And, look, I don't think it's a surprise that if you look at the dollar, the US dollar, right, looking at the monthly time frame, if this holds up, it's coming off of that 2011 channel support. And again, it's also, as long as, this week closes above 97.7, it's also reclaiming this area. Okay. The US dollar is reclaiming this area. So I don't think it's a coincidence that that's occurring. And then you've also got gold coming into what could be a significant resistance area. And again, we really haven't had many pullbacks here within this breakout. So again, I'm not saying get bearish. I'm certainly not saying go short this market. I don't think that's the right move. You're just playing with fire if you're trying to short this. But I think that, if we are going to get a deeper pullback that could offer some buying opportunities, then again, I think this area up here is kind of the one to watch, right? To where we could see the market at least come back here, tag areas like this, and then potentially, continue higher. Maybe we get a move down here, but again, I would not be banking on it with how strong this rally has been. But I also don't think you want to chase up here into this area, especially with that weekly resistance coming in just above 3,800. Okay, guys. So that's it for today's video. Again, finally, the Forex market is moving, but just play the range, guys. Don't trade what you want to happen. Trade what's on the chart. And right now, it's still a range-bound market. We're finally getting some movement here, some volatility, but for the most part, the markets remain range-bound. So take those profits when they're there. All right, guys, I hope the video helped. If it did, be sure to subscribe to the channel, hit that like button. Also, join us in the Discord VIP group. See the link in the description of this video. Have a wonderful weekend, and I will talk to you again next week.